Alright, ladies and gentlemen, today we're going to be going over 3 different dividend stocks. I'm going to be going over 3 different types of dividends. I'm hoping to kind of give you guys some diversification, a little bit of different look on things. I know a lot of you guys really have your ETFs that you guys really like, and I know a lot of you guys like single stock only. And then other guys just kind of like to see what's out there. So I kind of scanned the market. I went over what I thought was good, and I gathered a list of 3 good dividend stocks that I wanted to bring to you guys, which I thought also had some strong portfolios. The financial sheets on them were actually really good, and the dividends that they pay out are actually really good. And I think you guys will be surprised just how not recession proof, but recession proof these 3 stocks can be. So without further ado, let's get right into it, huh? Alright, ladies and gentlemen, without further ado, I want to make this as short and sweet as possible for you guys so you guys don't have to sit there and digest too much of me blabbing on, right? The first dividend stock that I want to go after for you guys is going to be an ETF. In this case, it's the VYM, which is the Vanguard High Dividend Yield. Right now, looking at the dividend, it's trading at $77.09 on Robinhood. This is a 5-year chart. You can see, just like everything else in the market, we're taking a hit, but this is just your standard typical ETF. If we go over to their website, you'll be able to see probably why I gathered this as one of my top ETFs. If you're going to put any of your money into an ETF that has dividends, the main reason is you can see their expense ratio right now is at a 0.06%, which if you guys know what I've been talking about whenever I talk about ETFs, they charge annual expenses, and a 0.06%, I mean, come on now, that's pennies on the dollar. I mean, that's ridiculous. So that's so cheap, it's almost nothing. So they're dang near giving it to you guys. This right here, if you go down to the website, you guys can also track their prospectus, but you can also go onto their website and it will actually give you their top 10 holdings, and you can see that these are very strong. If you were even to invest into these individually, I mean, I made a video on AT&T alone, so and I've looked into actually I've invested in Coca-Cola. So I mean, this company is just a simple no-brainer ETF in which you can just put your money away into it, collect the dividends that it's paying out, which as of right now, when I last looked, it was paying a dividend of 0.55 cents. So 0.55, what an idiot. 55 cents a share, which I know might not sound like a lot, but the stock isn't trading for a whole lot. So this is something that you guys can actually stockpile on and then just sit on it for the foreseeable future. An ETF, as the markets change, they'll actually swap in and out of companies, so that way their portfolio, this ETF itself, stays strong. So I mean, again, ETFs, no brainer. I'm not going to spend too much time on this one. Very simple, very minimal cost, very diversified, tracks a really high amount of different companies that are very strong, and a lot of these companies are also going to hold up strong in the recession, so this is not a bad stock. So overall, for stock number 1, I don't think you can go wrong with an ETF. And for all your ETF lovers out there, I think this one right here, VYM, is one that you guys should really be taking a look at. So without further ado, let's get into stock number 2. Alright, ladies and gentlemen, stock number 2 on this list of my top 3 dividends that I thought were out there. This doesn't mean that they're the best. This just means that out of the ones that I was skimming through, and it was a lot, these were just the big 3 that stood out best for me, that I thought would provide the best diversification for you guys. So stock number 2 is going to be Cisco, and this is a company right here, boy. This is a conglomerate, and they actually deal in the sales of network hardware, software, telecommunications equipment. I mean, they basically deal with anything with the internet, and they hold a 51.3% market share over their competitors. I mean, we are talking about one of the biggest majority players in telecommunication, networking equipment, software, anything high-speed internet, anything like that. The 5G is going to blow this company up as well. I mean, they're going to ride that wave up as well. So this is another play on 5G if you guys actually seen another one of my videos. And in right now's video, this company right now is going to be a dividend stock. Right now, they're what are they boasting right now? 3.5 dividend yield. but that actually equates to $1.44 per share when I made this video. So in the future, don't hold me to it, but $1.44 per share is not bad. This is a company that is very, very good. Recession proof, I would say so. Everyone needs their internet still. So if we go over to their homepage, man, is it beautiful. You can read about them. They got a bunch of different things. I'm not going to go into their 10K like I normally do. I'm trying to keep these videos a little bit more shorter and sweeter. I went through their financial statements. They are very cash heavy. Their balance sheet is not the best of the best, but it is very good. They have enough cash to basically pay off any of their long and short terms debts and stuff like that. So this company knows how to run a business. They know how to run a balance sheet. They are basically considered a conglomerate. Their market share, I did Google it, 51.3%. I mean, overall, this company is just massive. So in order to get this company for the bargain price that we're getting it, if we go back over to Robinhood right now, you can see it's taking a little bit of a hit. This is a company that is going to be able to sustain itself into the future and pays a healthy dividend. So they're going to be able to increase that dividend. Your pocketbook's going to be able to increase that. So that means this is a company that in the long term is one that you probably should definitely take a look at. Do your homework like always. God, do your homework. But seriously, think about this company because it's a strong one. It definitely is. And so without further ado, we're going to get into stock numero 3, which might not be that surprising, but I would actually say is probably one of the safest of the 3 besides... Oh man, that ETF. Anyways, it is what it is. Let's get into stock number 3. Alright, so stock number 3, I don't know if this is going to come to a surprise to a whole lot of you, but McDonald's... Man, I actually, to be honest with you, until I made this video, I actually never looked into McDonald's. I always knew McDonald's was a strong company, but it's just one of those companies where I just thought maybe the sale has already taken off, and I'm just, I'm more of a risk investor, so I'll go for a heavier growth, a little bit more risk involved. This seems like a company that I was always like a stalwart kind of company. And I still believe in that, but after looking at their balance sheet and just seeing how they're kind of reacting with this market, they're not getting hit nearly as hard as the rest of the companies are. This is a pretty soundproof company, and they just consistently grow. I mean, it's quite ridiculous, but they pay a really healthy dividend. What is it, $5 or $1.25 every quarter per share that you guys own? I mean, this is a very, very good company to own. If you are very serious about creating a portfolio that has dividends involved with it, you really want to take a look at McDonald's, especially right now, because even though it hasn't gotten hit nearly as hard as the rest of the market, this is a company that has been hit. So you can pick it up at a reasonable price right now and just ride those dividends. I mean, this company's not going to go anywhere. It's been through some of the worst times, and it's McDonald's. At the end of the day, I mean, everyone uses McDonald's. Let's give it a break now. Their website's beautiful, obviously. I don't got to show you, or propaganda or nothing like that. I mean, I don't own none of these stocks. I haven't invested in any of these stocks. So please don't take my word on it. Do your research. But McDonald's is just a strong company. Their balance sheet actually was amazing. So all in all, you can't go wrong with something like this, and I would actually say should probably be in every dividend investor's portfolio if they can get it at a reasonable price. And right now, that's for you to decide. But it's definitely a very strong company. So I hope you guys learned something. I'm trying to keep these videos a lot shorter and a lot sweeter, so that way you guys don't have to listen to me babble on a whole lot. I usually go into the 10K reports and stuff like that, but I do the research for you guys, and I'm just going to try and start delivering a little bit better quality videos. So this is kind of a step in that direction, so I'll start improving. I'll keep it going. So hopefully you guys learned something, at least got a little bit something out of this. If not, leave something in the comments, and I'll learn from it. So I appreciate you guys' support, and like always, stay safe.